So the collapse of Tesla stock is continuing. Foot Locker reported earnings this morning, and their stock actually is moving up right now. We're going to break those things down in this video, and of course, we're going to go over SPY, Triple Q, what's going on in the markets, other charts I'm looking at. So sit back, relax, hit that like button, and make sure to subscribe and get yourself some free money from Moomoo and from Webull, linked right down below. All the details are in the description box, guys. And with that being said, let's dive into it. So right now, it's about 1 p.m. on the East Coast, and the markets are a mixed bag. We have the S&P 500 down 0.1%, the Nasdaq's down 0.6%, but the Russell's up 0.3%, as we have the Dow up barely, but it's still up 0.1%, as the VIX is down 1.3%, and we have the metals not doing much, but gold is down 0.5%, as silver's pretty much at break even. So we're going to again break down Tesla, Foot Locker, the markets in this video, so let's just dive into it. Right off the bat right here on SPY, what I'm noticing is, and on Triple Q for that matter, is a wedge on the 20-day chart. You guys see it here on SPY, and you're going to see it on Triple Q, right? So at this point, guys, we have to pick direction. And where the bears came in and really took charge this morning is here on SPY. And we'll take a look at Triple Q in a second. Here at roughly 398. You guys notice how we actually hit 398 this morning in the pre-market, and we were very green in the pre-market. And you notice how we got rejected here at a lower high. We got rejected at the top of this wedge. That is not a good sign. The fact that we failed at 398,400, and Triple Q in the pre-market got rejected at, let's see here, 288. Also at the top of this wedge. Now we're actually moving to the bottom of the wedge, testing a very key spot for the bulls here at about 282, 280 on Triple Q here. That's right by the 180 SMA. This has to hold. I mean, if the bulls fail holding 280, we start dumping under 280, that's not going to be good for Triple Q in the short term. If SPY starts falling under, let's pull it up, under the lows from yesterday, 390. We break the 180 SMA on the 20-day chart. We break the wedge. That is not going to be a good look whatsoever. And it could be the start of maybe more selling. But right now, the truth of the matter is we have not yet picked distinct direction. We're still in this wedge, and that's how we have to treat it. And to be honest, with today being Friday, we only have about 3 hours left. We might not get that full direction today. We might honestly have to wait until next week, which is fine. The beautiful thing is we are not forced to do anything here as retail investors, traders. We don't have to, force a move on a Friday. We can just chill out. We can just wait till next week. And the thing is, with a lot of these hedge funds, the big institutions, they have clients' money that they're managing, right? And they have to hit certain deadlines. They have to hit certain returns. They're competing with other institutions, hedge funds. So retail investors, they do actually have I don't want to say every retail investor has an edge over Wall Street, but we do in general have a little bit. There are some edges, right? There are some advantages to being a retail investor. A lot of people think, oh, Wall Street, they have all the tools. There's no way you can beat Wall Street. There are some advantages, but that's besides the point of this video. Maybe I'd make another video on that. Let me know if you want to. You want me to make that video? Let me know in the comments down below. So let's see what oil is up to. I haven't looked at oil yet today. Crude oil right now is, oh my goodness, dumping under. Look at that, guys. So we called out the head and shoulders, right? That played out beautifully. Got to about 80, 81 a barrel, 82 a barrel, and now we're clearly picking direction under 80 a barrel. Holy smokes, we're at 78 a barrel right now. We're going down to those lows by the looks of it from the beginning of October, late September, 76 a barrel, and that's what I've been saying. I told you guys, again, we called out the head and shoulders, and I said literally yesterday, if $80 a barrel breaks, the lows here from middle October, it's going to be ugly. And it looks like we're starting to fill that gap down to the mid-70s a barrel. That's, by the looks of it, that's what we're doing. So let's break down Tesla. Tesla right now, of course, you guys know with Elon, Twitter, it's been under fire. Tesla today is down 3%. Now it's breaking under the 180 mark. Again, it is down $5 as I'm filming this video, and we're getting awfully close, and this is where the collapse is going to get worse, guys. We're getting awfully close to those lows from a few weeks ago. Not even a few weeks ago, about a week ago, 1 week ago, $172 is where we hit those lows, back on the 10th of November. We're at 177 now. I have a feeling, probably not today, but at some point next week, we're either going to break those lows or at least test 177. And pulling up the longer-term chart here, the 3-year chart, we can clearly see, clear as day, head and shoulders, right? Left shoulder, head, right shoulder. We're now right at, again, that 180 mark, which we're starting to fall under. We're now in the mid-170s, and if we take out 172, man, we're probably going to the 150s on Tesla. We're probably going down to the, maybe if 150s break, it could start going down lower hundreds. It is possible, guys. Don't just think, because it's Tesla, Elon Musk, that it can't get, hit that far down. It can't get to these marks. It could definitely happen. And now with Twitter, there was a lot of selling due to that, and who knows how that's going to play out. And speaking of Twitter, I mean, he is going into that company and turning it upside down. Employees are quitting. I was reading now he's shutting the office until next week or something like that. He's cracking down on management because from what I've been reading, Twitter's management has been super lax. They're getting paid a lot, not doing much, and I guess it goes to show in the earnings of the business. Have you not seen the stock's price, for Pete's sake, guys? Come on. The stock didn't go anywhere for a decade. You can see here on the max chart, they went public in 2013, November of 2013, about 9 years ago, not 10 years, but 9 years, pretty dang close to a decade, right? And it's pretty much there. I mean, he bought it for $54.20 a share, right? And it went public at about $50 a share. So in 10 years, Twitter did nothing. But now with Elon Musk, guys, he's coming in. He's he's looking to bring in new ways to make money. Of course, a lot of advertisers dropped. They left Twitter. That's a lot of money in advertising that they've lost. But with Elon Musk, knowing his track record, he's a successful businessman, right? Hate it or love it. I mean, he is. I feel like he could turn Twitter around. We'll see. The $8 a month for the verification. What else does he have up his sleeve to bring more revenue to the business and really start cranking that bottom line up? Because the bottom line, actually, have they been consistently profitable? I doubt it. I mean, let me see here on the 3-year. They had to have been all over the place. Yeah, all over the place. So let's see. Is he going to come in and really turn things around? And I think, personally, I think he is. He's doing it from within right now. A lot of people are throwing hissy fits, quitting, but at the end of the day, he's going to, if he's cracking down on the inner culture of the business, right? He makes that stronger. And of course, this is not going to happen in a week or two. This is going to take a while, probably. This is a longer term play. But if he really changes that culture, makes them, I don't know, starts recruiting better talent, I don't know. It's going to be a force you know what I mean, right? What's that saying, right? It's gonna be a powerhouse. Twitter will, but we'll see. I don't think it's gonna happen in a week or two, like I said. But longer term, Elon could really make this one of the better social media, or even the bigger, more profitable ones, over the next couple of years. I think it's in the cards. We shall see. So that's a quick little rundown on Twitter, Tesla. Now let's take a look at Foot Locker. Let's pull that up and see what's going on here. Foot Locker had earnings this morning, and the stock is up 7.5%. They did adjusted EPS of $1.27 versus $1.11, estimated on revenue of $2.17 billion versus $2.09 billion estimated. So they beat EPS on an adjusted basis, and they beat on revenue. And revenue a year ago was what was it? $2.19 billion. So it is down a little bit, guys. Pretty flat year over year on revenue. But I mean, it's not the end of the world. A lot of companies are not doing well year over year, and that was kind of expected. And clearly the stock doesn't care. It's up 7%. So comparable store sales, which I think is really one of the main catalysts that is moving the stock, that increased 0.8% year over year, where the estimate had them decreasing the comparable store sales by 6%, guys. That is unbelievable. So that's a good number here for Foot Locker, and the stock is playing out pretty nicely. I mean, we called it out, didn't we? We said if this thing breaks 34.35, the moving averages here, and also the multi-week high since the end of September, there could be a play to the mid-high or really the high 30s, maybe to the low 40s, which you can see here, low 40s, those were hit end of August, early September, mid-September. So we hit 41 bucks. We actually took the highs out from a couple months ago, but now we're back in the mid-30s. So for me, guys, I'm looking at Foot Locker here in the mid-30s, 34, 35. I feel like it is going to find support here. We'll see. I'm not just going to jump into it right now. I'm going to let the dust settle a little bit, and we'll see. You know, if we hold 33, 34, 35, consolidate there for a little bit, this could start making a move back to that 40 mark, maybe even higher. Let's see how it ends up playing out. So Foot Locker is looking good. My alert's at 40 bucks, not too bad of earnings, and they also raised, almost forgot to mention this, they raised their 2022 EPS guidance to $4.42, roughly to $4.50, compared to the prior range of $4.25 to $4.45. So that is very solid for Foot Locker in terms of 2022 EPS guidance. So yeah, keep your eyes on that, guys. We have other stocks moving today, including the Chinese stocks. Those are getting hit after reporting earnings yesterday. A lot of them did, and they spiked. That's the funny thing, right? Baba's back down 5% on the day. Tencent, TCEHY is down 7%. Coinbase is getting hit, down 8%. I'm sure there's a lot of speculation on Coinbase, with what's going on with FTX and all these other exchanges. Maybe not so much that Coinbase is going to go under. There actually is a podcast that I was listening to with, Brian Armstrong. He was on the All In podcast. I just started that episode actually, so I didn't watch the whole thing. But he was talking a little bit about it. Saying his thoughts on FTX and how Coinbase is this, that, the third. I mean, they're going to be fine, but who knows these days? I mean, you never know. So there's some speculation that Coinbase, I mean, who knows? Are they the next one to go under? Which I don't think they will. I mean, I haven't dove too deep into the numbers. Obviously, they're a publicly traded company. They're audited, so there's a lot. That's the big. There's a difference here between Coinbase and FTX because of that reason. But again, you never know. I mean, who the heck knows? So yeah, they're down 8% to 45 bucks a share right now. They're getting awfully close to those lows from the middle of May. So I mean, we could be going there, 40 bucks. I mean, we're right there. Another 8 to 10% drop. We're literally right near those lows. So let's see what else is moving. Nvidia's down 3%. Airbnb's down back under 100, down 2% on the day. And really, the only green stocks that are on my watch list, guys, are Foot Locker right now, DraftKings, DWAC, which I'm not touching that, to be honest. I've said that before on the channel, but I still track it for fun. Meta's green. Applied Materials, they're green. Starbucks is trying to break 100. It's green. It's trying to break over 100, but it's been struggling to do that. So what do you guys think? I mean, the markets right now, they're teeter-tottering. We're red here, we're green here. So we'll see how it plays out. Most likely next week is when we'll get that direction that we're looking for. And, until then, we're going to have to be patient, guys. That's the reality of the matter. So if you enjoyed the video, hit that like button. Make sure to subscribe. And don't forget to get your free money from Moomoo. You get a $10 cash coupon plus up to 15 stocks, each up to $2,000. All you got to do is use my link down below, deposit at least $100, and boom, you get that. And I think the $10 cash coupon is limited time. So use that link down below. And make sure to also get your 12 stocks from Webull with any amount deposited down below. I'll catch you guys in the next video. Peace out.